Is if council's on the line, would like to enter appearance for the record here in the room, we'll move to the people that are on the phone.
And we're in the Mississippi Power Company Notice of Intent to Change Rates, which is 2019 UA 219. This is Frank Farmer, General Counsel of the Public Service Commission. And I'm the only one in the room, so.
Yeah. All right, will council on the phone enter their appearance for the records, also identify the company representative you have with you.
This is Tad Campbell, General Counsel, Mississippi Public Utility Staff.
Mr. Chairman, this is Ricky Cox with the law firm of Balch and Bingham, representing Mississippi Power Company. And I believe Sean Sheridan is on the line, along with Ben Vance of the company.
Mr. Chairman, this is Jim Halford. I'm representing Chevron with the Brunini Law Firm.
Okay, is that it? Anybody else? Okay, so there's no witnesses in the room. Do we have any witnesses on the telephone?
Mr. Chairman, this is Tad Campbell again. We don't have witnesses, but I do have with me Brandy Myrick and Burton Jones, and we're prepared to answer any questions about the stipulation if the commission has any.
Okay. Do the parties wish to make an opening statement? Okay.
Ricky Cox, Mr. Chairman, we would forego any opening statement, and at the appropriate time, we would just offer the file into the record upon your direction.
Okay. So we'll do that. Is anybody else?
There's no opening statement as well, Mr. Chairman.
Okay. Thank you. All right. If nobody else wants to make an opening statement, then please put on your first witness.
Mr. Chairman, as I think Mr. Campbell indicated, the parties have filed a stipulation. Staff and the company have filed a stipulation, and as the procedures of the hearing were set forth, we won't be presenting any live witnesses today, but we would offer the testimony of all of the witnesses, which would include the company's witnesses, the staff's witnesses and their consultants, along with FEA's Federal Executive Agency and Chevron's witness, Mr. Collins. So that's all the testimony that's filed. And I would offer as composite Exhibit 1 the entire file in the record, which would include all of the pre-filed testimony I just described, along with the stipulation that was entered between the staff and the company, to which the parties of record have indicated they have no objection, and then along with the compliance rates that were designed to recover the stipulated revenue requirement, and the revised depreciation rates that were the subject of the stipulation, which were filed following the stipulation as well. So I believe with that would conclude composite Exhibit 1, and we would offer that in the record.
Okay. Do we have any objections to that?
No objection.
Okay. Okay. Does anybody else have a question?
Mr. Chairman, this is Frank Farmer for the commission. I would ask Ms. Myrick and Burton Campbell whether there's any objection and whether they have reviewed the depreciation study presented as part of this stipulation and whether it meets with their approval.
This is Tad Campbell. Yes, the answer is yes. The depreciation study as filed was reviewed by staff's consultants. An error was identified and has been corrected, and compliance filings, as mentioned by Mr. Cox, and we do accept it as revised and corrected.
All right, does anybody else, have anything further?
Okay.
Okay, all right, now, the commissioners, does any commissioner have a question?
No question, Mr. Chairman.
This is Brent. I have a question, or just, maybe a comment by all parties. Just, I know a lot of work went into this, since the filing of this rate change, back in late November, and come to a pretty comprehensive stipulation. And I know there's discussion about, changing, or at least looking at the changing of the process going forward and how rates are set, the base rates, things like that. So does this stipulation really lay the foundation for a more responsive or responsible rate making going forward, in regards to PEP and FRP? And I just wondered if anybody could comment on that.
Commissioner Bailey, this is Tad Campbell. I'll make a few comments, and then maybe Mr. Cox would like to follow up on that. We do feel like we've made a significant step in improving the process going forward. Attached to the stipulation is Exhibit A, which sets forth a new framework going forward in the company's performance evaluation plan. It was the result of a lot of negotiation and a lot of work, and we're very pleased to have that as part of the stipulation. So we do feel like it will improve the process and the rate-making process going forward for Mississippi Power. It also makes their performance evaluation plan will be more similar to Entergy's, with a lot of the same provisions in it. So it's a goal we've been working towards for a long time, and we're glad it's there.
Commissioner Bailey, this is Ricky Cox of Mississippi Power Company. We concur with Mr. Campbell.
Mr. Chairman, I've got a question, if you don't mind.
Sure.
I don't mean to belabor this, but I want to pick up on a point or a comment that was just made about responsible rate making going forward. And I understand the fact that Exhibit A lines that out. Mr. Campbell, my question for you for the record is anything prohibited the staff from making any of these recommendations before this case?
I don't think I said responsible rate making.
No, you didn't. Commissioner Bailey did, but I want to make sure that we get on the record that whether or not the staff has had the ability, since it was created, I think in 1993, to make any recommendations regarding changes in the process. The staff's never been prohibited from making those recommendations, have they?
The staff was created in 1991, and this performance evaluation
1991.
plan. This performance evaluation plan has been in place since, I think, 2005. So you're right. No, there have been ongoing discussions, my understanding, over the years with the commission on various ways to improve the process.
Commissioner, excuse me, this is Verdon Jones also speaking. The staff and the company have made revisions to PEP throughout the years since it was implemented, especially since 2003, or when was it? It was 2003 when we implemented the current plan. And it's been revised several times as we've gone through the process, and nothing has prevented us from suggesting changes.
Oh, and I understand that, Mr. Jones, and I want to be clear about my intent. The quote was responsible rate making going forward, and that leaves the impression that there's been irresponsible rate making in the past. And I just want to be clear that there's nothing that has prohibited any changes that have run forward. And in my recollection, in 12 years of being here, these cases have all been stipulations in which the staff met with a degree of terms with the company for the past 12 years that I'm aware of, and that's any characterization of this as somehow a Damascus Road moment, which going forward we're going to be responsible, as if we've not been responsible in the past, is just not a fair characterization. I just want to get that on the record.
Well, I 100% agree with that, and we have done everything within our power and our resources with each filing to submit it to investigation and critical review. And we're satisfied that the process has been good. I think we've just improved it greatly from the standpoint of being able to objectively verify numbers and the adjustments being made there too to set rates.
Yes, sir. I appreciate that, and I just wanted to clear up that inference. I hate to even belabor this with the declaration of emergency we're on. I just want to clear that up. Mr. Chairman, if there are no further comments, I move approval of the stipulation.
Mr. Chairman?
Go ahead.
Hey, this is Commissioner Bailey. I apologize. Responsible rate making, or the way it was framed, may not have been the proper way of doing it, and I certainly did intend to infer that the last 12 years of rate making here has not been done properly. It was certainly in a way to create a more efficient process going forward that more reflects current use, consumption, and purchase of energy and delivery of that going forward, as we tend to try to create consistencies throughout rate making regarding the various service companies here in the state. So that certainly was not a reference to past performance of this commission or of any of the utilities here. It was certainly a way to create a more consistent approach to rate making going forward in regards to our various utility partners. So hopefully that was not read into being any kind of slight or anything along those ways, Mr. Commissioner.
Thank you, Commissioner Bailey. Mr. Chairman, I call the question.
Okay, if there's nothing else, I'll entertain a motion to approve the stipulation reached between the staff and Mississippi Power.
So moved.
Do I have a second?
Got a second?
All in favor signify by saying aye.
Aye.
Any opposed? Motion passed. All right, we'll stand adjourned if there's no other business on that. Thank you again for all being here online and our staff here. It's a bare room, but we appreciate you guys. And with that said, we'll stand adjourned on that hearing, and then we'll move on to the second hearing.
Excuse me,
Yes?
the court reporter?
Just in time for the second hearing.
Well, I was sitting on the other line for the other conference call, and then I got the email.
Dean Maxwell, Public Service Commissioner for the Southern District.
Okay.
All right, so we're going to move on to the second mission, the second hearing now. The commission calls up the hearing in docket number 2018 UA 67, Entergy Mississippi LLC, continued modernization of the generating facilities of Entergy Mississippi LLC with the acquisition of the Sunflower Solar Facility in Sunflower County, Mississippi. The commission wants to make clear that one of the commissioners, in accordance with the guidance relative to preventing the spread of the virus that causes COVID-19, is appearing electronically pursuant to Mississippi Code 2540.15. And Commissioner Presley, you're still there?
Yes, sir. It's Brandon Presley. I'm calling in by telephone for the court report.
Okay, good. If council's in the room, would you please enter your appearance?
This is Frank Farmer, General Counsel of the Mississippi Public Service Commission.
Okay, will counsel on the phone enter their appearance for the record and also identify any company representative you have with you?
Good afternoon. This is Tiana Raby representing Entergy Mississippi. I would like, Commissioner, if you would give me the pardon to do so, to introduce my co-counsel and my witnesses, and then also then defer to our joint petitioner to introduce himself. Today I have with me Alicia Hall, Alex Martin, who also work with Entergy Mississippi, and also our co-counsel Jay Breedville, who is the Duggins Wren Law Firm. Mr. Breedville is appearing pro hoc. We also have Jeremy Vanderloo on the line, who's the Vice President of Regulatory Affairs for Entergy Mississippi. Mr. Fair, are you on the line?
You might be on mute.
I'm sorry. My name is George Fair. I'm here with my law partner Bailey Fair. We're with Watkins and Eager. We're representing Sunflower County Solar LLC, one of the joint applicants. Also on the line is Jeff Calico from San Francisco, who is the Associate general counsel of Recurrent Energy, which is the owner of Sunflower County Solar LLC. And he is appearing as counsel and as well as the representative of the company.
Mr. Chairman, this is Sam Mabry representing the public utility staff along with Tad Campbell and Colin Kane from Bates White is our witness.
Is that it? Okay.
Commissioner, if I may, and they'll introduce themselves, but just for the record in the court reporter, we also have witnesses here on behalf of Entergy Mississippi.
Yes, that's my next, if you would have the witnesses, introduce themselves and the court reporter swear them in.
Okay, we have Mary DeQueer, Mike Goen, and Fong Nguyen, Pat Stack, and Alan Hurd. Mr. Court Reporter, can you swear them in all at the same time, or do you want to do them individually?
I can do them all at the same time.
I just don't know how to, I'm not familiar with how we need to do this telephonically, so however you would prefer, we can definitely accommodate that.
Yeah, I don't think technically I'm supposed to swear them in. Do you have someone else
swear 'em.
there that's an
I
officer
can-
of the court that can swear them in?
I can swear him in.
We can swear them in here.
Okay.
So,
Would the witnesses for Entergy each state their name, raise their right hand?
My name is Mary DeQueer.
My name is Mike Goen. My name is Fong Nguyen.
Do
My
each,
name is Pat Stack.
My name is Alan Hurd.
do each of you swear to tell the truth in this matter, the whole truth and nothing but the truth, so help you God?
I do.
I do.
I do.
Commissioner Maxwell, if I may, we had spoken with the staff, and we also have gotten an order from the commission that recurrence is excused. However, I do think that Mr. Fair would like to present some information to the commission before the Entergy Mississippi witnesses give a little bit of summary of their testimony and then submit themselves for questions.
We need to have Colin sworn in first.
Okay.
What was that? Who needed to be sworn in?
Colin Kane.
Mr. Kane, please state your name for the record.
My name is Colin Kane.
You swear to tell the truth, the whole truth, and nothing but the truth in this matter, so help you God.
I do.
Okay. For the court reporter's reference, this is Frank Farmer, counsel, also a notary public capable of swearing oaths.
Thank you.
okay, there's no witnesses here, so we've got everybody sworn in. And, do the parties wish to make an opening statement?
Yes, sir. This is George Fair. I'd like to make a brief opening statement, if you would, about, if you permit me.
Sure.
About Sunflower County Solar LLC and Recurrent Energy. As I mentioned, Sunflower is one of the joint applicants. I'd also like to give a brief summary of our witnesses' written testimony. Sunflower is the developer of the Sunflower County Solar Project. Sunflower is the wholly owned subsidiary of Recurrent Energy, which I mentioned earlier, which has offices in Houston and also in California. Recurrent is the wholly owned subsidiary of Canadian Solar Inc., which is one of the world's largest solar power companies and a leading manufacturer of solar modules. Sunflower's role in this transaction before the commission today is to develop, finance, and construct a 100-megawatt solar project on 1,000 acres of real property in Sunflower County, Mississippi, close to Louisville. Sunflower's entered into a build-own-transfer agreement with Entergy, under which it constructs the solar facility and then transfers it to Entergy upon its completion. Its responsibilities include procurement of equipment systems, engaging contractors, and managing the work of the contractors who will carry out the construction of the facility. Sunflower's witness is Spivey Paulp, who is the Director of Development of Recurrent Energy, and he's responsible for the development of solar projects throughout the eastern half of the United States. Mr. Paulp's written testimony demonstrates that Sunflower and Recurrent are fully capable of financing and building the Sunflower County solar project. His testimony explains that Recurrent Energy is a leading utility-scale solar project developer which delivers electricity to large energy buyers. It functions as the U.S. project development arm of Canadian Solar. Mr. Paulp's testimony indicates that as of the filing date of this proceeding, Recurrent had developed, constructed, and brought to operation 2.3 gigawatts of solar projects in the United States. Half of those projects are the same size or larger than the proposed project before the Commission, and most involved similar technology and solar tracking equipment as that which will be used in the construction of the proposed facility. You, as the Commission, were kind enough to excuse Mr. Paulp from appearing to testify in person because of a prior conflict, and he's thus not on the phone with us. However, if his plans have changed, and if the Commission has specific questions of Mr. Paulp, we can get him on the phone to respond to those questions if you decide to do so at a later time in this hearing. One other item just to mention on the front end is that, as I understand, Entergy has proposed a modification to the transaction to assign the BOT agreement to a tax equity entity in order to obtain additional benefits to the ratepayers. Recurrent has participated in 10 tax equity entities in some of its other solar projects, is familiar with them, and has agreed with Entergy to amend the BOT agreement to allow for this additional transaction structure as is proposed by Entergy. Sunflower is prepared to proceed with the Sunflower County project and looks forward to doing so if this Commission approves the project.
Okay, thank you. Anyone else?
Commissioner, this is Tiana Raby. I don't have an opening statement and would rather forego that in the interest of allowing our witnesses to further introduce themselves and summarize the scope of their testimony.
Okay.
However, before I do that, I would like to ask that the entire file for this matter, which is including pre-filed direct rebuttal and supplemental rebuttal testimony from the parties, exhibits and data responses be moved into the record. And also, we've previously provided to the Commission and staff and to the court reporter additional exhibits that have been identified as confidential documents 1 through 6. And we've spoken with counsel for the staff, and Mr. Mabry does not have an objection. So we'd like to have that entire record moved into that entire file moved into the record.
Okay, so moved. Now, can please put on your first witness?
At this point, I'd like to have Ms. Mary DeQueer introduce herself.
Good afternoon, everyone. My name is Mary DeQueer, and I am the Manager of Resource Planning for Entergy Mississippi. I manage, among other things, Entergy Mississippi's long-term integrated resource plan and its solicitation or RFP processes. Could you speak up just a little? Oh, sure. Sorry. My testimony explains why the acquisition of the Sunflower project will support Entergy Mississippi's plan to reliably meet the long-term needs of our customers at the lowest reasonable supply cost. Our 2018 integrated resource plan indicated that a new gas resource combined with a new solar resource is the best way to meet additional generating capacity needs. As you may recall, the Commission approved our acquisition of the Choctaw facility, which allowed us to address the gas needs. Entergy Mississippi targeted solicitation in late 2017 to determine the best solar resource to address the remaining capacity needs. As outlined in the testimonies of Mr. Nguyen and Mr. Goen, the sunflower solar resource is the best option for addressing the remaining near-term capacity needs at the lowest reasonable supply cost while increasing supply diversity, which helps to mitigate risk.
Thank you, Mr. Queer. Mr. Goen, can you introduce yourself?
Yes. Hello, my name is Mike Goen. I'm the Director of Planning Analysis in our System Planning and Operations Department. My testimony focused on many areas, including the commercial terms of the transaction. We've designed the transaction to protect customers' interests. First, there is a scope book that we put together with Envision, a well-recognized solar consulting firm, to make sure that Entergy Mississippi customers will get what they pay for and the project will perform. The deal is a fixed price deal with construction milestones, performance testing, equipment warranties, and oversight and reporting. The counterparty is an experienced solar project developer. We will have an owner's engineer and provide the commission with updates throughout the construction process. I will also be discussing the transaction structure and the benefits that it provides. The BOT structure protects customers from various risks. Sunflower will provide long-term price certainty, opportunities to upgrade the resource for customers' benefit, and the comfort of knowing that Entergy Mississippi is maintaining it as its owner. My supplemental rebuttal testimony addresses the fact that we have taken 3 specific steps to address the staff's concerns. To improve the economics of the deal, we have worked to develop a tax equity structure that will enhance the benefits of the transaction to customers by an estimated $15 million. If we are unsuccessful in completing this structure, we have offered a cost cap on the transaction to guarantee customers those benefits. Lastly, to respond to the staff's concern about the lack of PPAs in this solicitation, we've agreed to evaluate PPAs along with other proposals in the next solar RFP. Thank you.
Tiana Raby, thank you, Mr. Goen. Mr. Nguyen, can you please introduce yourself?
Yes, hi, my name is Fong Nguyen. I'm the manager of the Planning and Decision Support Analysis Group within System Planning and Operations. My testimony supports the economic evaluation that was performed within the competitive solicitation, where the Sunflower project was selected as the best proposal for Entergy Mississippi customers. The economic analysis shows that the resource with the partnership structure is expected to provide over $19 million in net benefit for Entergy Mississippi customers.
Thank you. Mr. Stack, can you please introduce yourself?
Good afternoon. My name is Patrick Stack. My title is the Controller of the Utility Operations Accounting Group. The purpose of my testimony is to describe the accounting treatment resulting from the proposed partnership structure, including the impact on accounting from the proposed adjustments for regulatory purposes. I also explained that the purpose of the proposed adjustments is to remove the non-cash effects of the required accounting treatment so that the amounts included for rate-making purposes reflect the actual invested capital. My testimony includes an exhibit that illustrates the accounting treatment that I described. I also have one correction to make to my supplemental rebuttal testimony. It's on page 8, line 21. On that line, the first word should be changed from on to of. That is all.
Thank you, Mr. Stack. Mr. Hurd, can you please introduce yourself?
Yes, my name is Alan Hurd. I'm the manager of regulatory filings. I'm responsible for regulatory filings for EML. My testimony that I'm offering is offering revised calculations of revenue requirement and the rate impacts based on this alternate partnership structure proposed. My testimony explains the adjustments to its accounting to reflect rate making consistent with other EML facilities. These adjustments allow the rate making to accurately reflect EML's investment in the partnership and ensure that customers receive the full benefit of the partnership as it declines in a steady and predictable manner. For the first year, I calculated the first year's revenue requirement of approximately $9.1 million, which is $9.9 million lower than the direct ownership of the facility. And I have one correction coming. The FRP impact on the customer bill is calculated to be 76 cents per month, or 0.7%, and only 66 cents per month after applying the effects of all the riders, including a credit of 10 cents per month in the PMR related to the hedging settlements.
Thank you, Mr. Hurd. That concludes the introduction and summary of our Entergy Mississippi's witnesses. If the staff or the commission would have any questions for them, please advise.
Staff does have a few questions, Mr. Chairman.
Okay.
Okay. Mr. Chairman, can you hear me?
Yes, proceed.
So, Mr. Goen, looking over your testimony, we're looking at this tax equity partnership going forward, in addition to the bot. And there are really three specific instances which I can think of where an issue might arise, that might negate the partnership. So, the IRS might not recognize the partnership. FERC might fail to issue the necessary orders to support the partnership. Or EML might not find a third-party investor. If any of these three things happen and this partnership falls through, what happens?
This is Mr. Goen. You asked about the three criteria that we have listed in there, and I heard the three that I mentioned in my testimony is, yes, there is a provision there if the tax law should change. The second one is, yes, if we don't get the necessary FERC approvals. And then the third one is about a significant market impact that prevents us from getting the transaction completed. Those are the three you're asking about, and then...
Well, I'm not specifically asking about that. I'm asking, if one of those falls through, it appears you can't go through with this tax equity partnership. And my question is, what happens then? The commission's made this recommendation and approved Sunflower, and y'all go forward with this, and you're set to make an investment and are committed to seek no more than $136 million in recovery of costs. What happens if that goes away? What happens if it just reverts back to a bot? Or does it revert back to a bot?
I believe it does revert back to a bot if one of those conditions occurs.
What does that mean?
That means that Entergy Mississippi gets the benefits of the bot as originally described within the testimony.
What's the difference between the bot and the tax equity partnership? What's the cost difference?
We're projecting it to be about $15 million. That's the difference.
Okay. And there's no protection you can add in there for ratepayers if one of these three things happens.
The three things that were chosen were really chosen because they're things that we cannot control. That they were outside of the realm of control. So, yes, it would revert back to the original benefits that we projected for Entergy Mississippi customers.
Okay, I wanted to ask about just two of the new exhibits that were given to us yesterday, and what exactly you're trying to illustrate. So looking at document 1, the proposal summary.
And This is Tiana, and we just want to make a notation that the information in these exhibits is confidential. And so, if there's, what we could do is have, Mr. Goen discuss those and describe them generally without referencing confidential information. However, if, Mr. Mabry, if you have a specific question that you'd like to ask, is there a way that we can do so that we don't divulge the confidential information in the exhibit?
Let me see if I can just ask a question. If it violates confidentiality, we just forego it. So I'm looking at, I just want to look at one thing.
If we could, talk about the information maybe by, line item or project ID, so
Okay.
that we can, maintain some of the confidentiality. And so there are some, items in the document that we can discuss, and I think the column or the row line is the project ID.
All right, so you want me to refer to the proposal ID?
Yes. Yes.
All right, so I'm looking at P-1207.
Okay, and this is, Mrs. DeQueer, and I can try to answer your question.
All right. Let's see. Is P-1207 in this exhibit a project?
I'm sorry, I can't answer that. I can only speak in the context of, the project as they apply to the solicitation that Entergy Mississippi conducted.
And
Okay.
so,
Is there anybody that can answer that question for me?
so let's do this. So, the document that we're looking at represents proposals that were in direct response to the RFP related to this project. And so, this project is, so what the commission is looking at right now is the result of that RFP. The summary that you're looking at is, a summary of other information that we received from other bidders, but it is not something that has gone outside of the scope of this project. And so maybe if Ms. DeQueer describes what we're looking at, just generally, that'll give a little bit more context about what this is.
Fine by me.
Would that be helpful?
I think so.
Okay, all right, great. Okay, well, this is Ms. DeQueer, and I'm gonna try to walk everyone through the information that, that's presented in the table. And keep in mind, a lot of some of these things are confidential, so I'm gonna try to be as careful as I possibly can. So the table that those who received the document are looking at represents the proposals that were received through the 2017 solicitation for our solar resources. The first proposal in the table, P-6769, was removed for further evaluation based on the first confidential note below the table. The next proposal in the table, P-1207, was the proposal that was selected through the initial evaluation of the proposals received in the solicitation. Shortly after Entergy engaged the bidder in negotiations, that bidder informed us that they were no longer interested in transacting as a bot and suggested an alternative structure that would have shifted the additional costs and risks onto Entergy Mississippi. This change in structure was not acceptable to EML as the bot structure was designed to minimize risk to Entergy Mississippi. At that point in time, negotiations were suspended with this particular bidder. The next two proposals in the table, P-9843 and P-5466, were the remaining conforming proposals in that original solicitation. These bidders were contacted and offered an opportunity to provide updated proposal information and costs for evaluation. This evaluation process ultimately selected the Sunflower project to proceed to the next stage of negotiations.
I believe that's helpful. Really, what I wanted to do is just illustrate that this was all for a bot. This didn't include a PPA.
That is correct. The only product we solicited for was the box.
So I wanted to look at P1207 one more time. Are you aware that the estimated construction cost for that facility was, can you explain the discrepancy? I know it might be impossible simply because it's a buy to a PPA, but if you could just try to explain the discrepancy between why it would have cost Entergy Mississippi.
That's confidential.
Yes.
So if we can, just refer to the project numbers, and then if you can talk about just the category, then we'll be able to see where you're going. This is Tiana Raby. And so really all of the information in the cells populated is confidential. And so if you can just kind of talk generally about the proposal ID and project cost or whatever particular characteristic of the project or the solicitation you want, then we can answer that.
Okay,
Mr.
Tiana,
Chairman.
this is Tad Campbell. I just got a clarification question here for you. You provided these exhibits at 7:10 last night. And you're saying they're all confidential. How exactly do you want us to deal with it in these hearings? Are you saying we can't talk about the numbers? What do we need to do?
Mr. Chairman, if I'm going to interrupt, this is Frank Farmer. This is a public hearing at this matter. It would be appropriate for the confidential information that Mr. Mabry referenced to be stricken from the transcript and record of this, but we can't unring the bell on it. With regard to how the parties want to agree to discuss confidential information, that's up to them, but it is appropriate to strike that from the transcript.
Well, Mr. Farmer, when we have other hearings that are public hearings, when confidential information is involved, we exclude people from the courtroom and continue the hearing. So how do we deal with that here? Are we saying that the hearing can't go forward because we can't discuss the information? I mean, this is information that was put before the commissioners last night in an email that we're not being allowed to discuss. So I guess I need some clarity on that.
Mr. Campbell, was that Tiana? That was Mr. Campbell speaking, but this is Tiana Raby. Mr. Campbell, what I propose for us to do is to discuss the information that we've provided and that you are asking questions about. What I imagine that we can do under these circumstances is that since everyone who is answering questions and asking questions and making the ultimate call on reviewing the information that we're presenting has a copy of the document, if you can just ask the questions based on, if you're looking at the document one that we're talking about right now, if you can refer to matters with respect to the first row as the proposal ID, or either to the category, project location, resource name, and proposal price, without mentioning the details within the individual cells, then ask those questions in that way and we can answer them. The information that is part of the record will be these documents, and so I think we can still get the questions answered for the staff and for the commission. It's just that referencing them openly on this open call won't take place. Does that work?
Well, court reporter, are you able to process that? Do you follow that?
I can take down everything that is said. I mean, I don't determine the document. If you reference a line number, then it's going to be in the transcript.
This is Mr. Goen. Maybe I can take a shot at answering the questions Mr. Mabry had without referencing the numbers, and then see if that's satisfactory.
Yeah, why don't I do it this way? Since everybody that needs to has a copy of the information in front of them, let's look at, so we're looking at proposal ID P1207, and you're looking at line 4, proposal price.
Correct, and Mr. Mabry, your question was about why is the number there different from a publicly available number for other transactions that could be out there. And so We don't know. We know what was bid to us in an RFP, and so that's the number we provided to you. What we can hypothesize is there's profit in there. There's extra things of other risk factors they might have priced in, and other profit they might have said, hey, we can build it for a price. This is another price that if we had to take those risk factors and we need our own profit, that's why the number could come out with something different. And I hope that answers your question. This was Mr. Goen again.
Just really what I wanted to know, does the bot transaction increase the cost?
No, the bot transaction in and of itself wouldn't necessarily increase the cost. We went out with a solicitation for proposals, and this is what this particular bidder provided to us in response to that proposal. Who was that? I'm sorry, it was Mary DeClear.
Any further questions?
We do have further questions.
Yeah, okay. I'm gonna go back to Mr. Goen. Looking at your supplemental rebuttal testimony. On page 5, line 21, you have the quote, to capture time value of the ITC. What do you mean by the time value of the ITC?
Yes, this is Mr. Goen. The ITC is the investment tax credit, and by doing the tax equity partnership, finding a partner that can take advantage of that tax credit, they can take advantage of it in year one, immediately when the transaction occurs. If it's a utility that is doing the transaction, we can only take advantage of the tax credit 1/30th per year for 30 years. So imagine if a tax credit is $30 million, and I get that in year one in one situation, or I get $30 million spread out $1 million per year over 30 years. And so thus, the time value of money is, hey, I can get that $30 million today versus spread out through time. And when you use discount rates and everything, money today is way more valuable than money spread out over 30 years.
All right, thank you. Another question. Would the tax equity partnership reduce the cost to construct Sunflower? Would it reduce the additional cost EML has identified and associated with transmission, for example?
This is Mr. Goen again. I don't believe that it would change the construction cost. It merely is around the tax credits that you get them sooner rather than later. If we enter into a partnership with a third party, then our split would be that we would have less investment than 100%. And I don't really want to go into the specifics of exactly what percent, but just a range, maybe in the 70-30 kind of range. You could expect that our investment would be 70, you might find a counterparty for around 30%.
Okay. Sticking with you, under the proposed tax equity partnership, the partner contributes a portion of the required capital and receives the value of a portion of the ITC and a share of the output of this facility, both energy and capacity. Is that correct?
Yes.
Okay. In very basic terms, ratepayer costs go down, but ratepayers also get less from the Sunflower plant under this arrangement. Is that right?
Yes, and it's to the benefit of customers is our expectation.
Is there any additional economic value from the tax equity partnership arrangement other than the time value of the ITC?
There are other, this is Mr. Goen again. There's other components to it. The bulk of the benefit is that, yes, we expect that the Energy Mississippi customers will get a greater share of the cash proceeds than what the investment is, because we're foregoing on the tax credits. The other thing is that there's a hedge in place where we would also, Energy Mississippi customers would get 100% of the MISO proceeds of the transaction in exchange for basically a portion going back.
Okay, one more thing, the net result of the partnership is obviously a bit complicated. Let's just hypothetically say that EML didn't have to enter into a tax equity partnership, but counterfactually could realize ITC benefits fully on the same schedule as allowed by the partnership. You follow that?
Sorry, Mr. Reagan, this is Mike going again. You threw a couple different things of a hypothetical that I didn't understand exactly, but it sounded as though you were saying no tax equity partnership, but still, is there a way to still create those same benefits for customers without it?
Yeah, let's say you could still receive those ITC benefits without the partnership.
We do get the ITC benefits without the partnership, we just don't get the benefits of them right away.
Okay. Would the difference in estimated value to ratepayers in this case compared to that in the initial BOT proposal simply be the fact that the ITC benefit would be discounted less when calculating the net present value of the transaction?
You lost me on that one, I'm sorry. Can you repeat that?
With the difference in estimated value to ratepayers in this case compared to that in the initial BOT proposal simply be the fact that the ITC benefit would be discounted less when calculating the net present value of the transaction. What I mean is, there's a difference in the value of the two cases in the same way that $10 today is worth more than discounted value of $10 next month.
I agree with that last statement that yes, getting the tax credit today is more valuable than getting the tax credit over the course of the entire asset.
Okay, this is Tad Campbell. I have one question, if you don't mind, and I don't know who to ask the question of, so which witness could best help me understand the production capacity of the plant?
This is Fong Win. By production capacity, I believe you're talking about the capacity factor assumption for the facility, is that correct?
And just, you know, the nature of the facility and how much it's gonna produce and what we can look for as far as production from it over the course of an average year. Would that be you?
Yes, I can provide some information on that.
But potentially, go ahead with your question, and we'll figure out who the best person is for that.
Okay, so it's a 100. The proposed plan is a 100 megawatt solar facility, correct?
Yes.
And you've modeled this whole approach, this whole filing based on, I think it's 26.3% capacity factor, correct?
This is Fong Win. Yes, we assume it's 26.2% capacity factor. That's correct.
Okay, I had it at 26.3, so it's 26.2. Okay, so what I want you to do is take that facility and put it in terms of how many kilowatt hours can we expect in production from that plant over the course of an average year.
Okay. Again, this is Fong Win. For a 100 megawatt facility, and we assume a 26.2 capacity factor, because that's based upon a PV-SYST industry standard model that projects here's the estimated capacity factor facility, given the location of the facility, the technology of the facility, and other weather type data. And so that equates to approximately 230,000 megawatt hours in the first year before factoring in degradation. Our analysis assumes a 0.5% annual degradation, which is an industry standard type of value
Okay, so we'll just go with the first year and not discuss the degradation factor right now, but first year, full production, first year, 26.2% capacity factor, we're looking at 230,388,000 kilowatt hours. Or let's just say 230 million kilowatt hours, like you said. Do you agree with that? I mean, 230,000 megawatt hours, 230 million kilowatt hours.
Yes, this is Paul Nguyen. Yes, that is fair.
Okay, so what you filed and what the new proposal is asking for is an $11 million a year revenue requirement. Is that correct?
Mr. Hurd can answer that.
This is Alan Hurd, it's actually 9.1 million.
Reference your exhibit for that, please, Mr. Hurd.
If you look at exhibit, I believe it would be 1, it should be the supplemental.
This is Alicia Hall. It's gonna be an Alan Hurd supplemental rebuttal exhibit number 1.
Give me just a minute, please. Okay, so what does that come out to per kilowatt hour if we divide the 230 million into the revenue requirement? Can you do that for me?
Sure. So $9.1 million, this is Paul Nguyen, $9.1 million divided by approximately 230 million kilowatt hours equals to approximately a little bit under $40 per megawatt hour.
So 4 cents per kilowatt hour?
Approximately, that's correct. This is Paul Nguyen again.
What is your current aborted cost rate filed here at the commission? You know?
This is Mr. Goen, and we're not sure of the exact amount for that.
Do you know if it's more or less?
I don't know exactly what it is. This is Mr. Goen again. I do know that with that, you're getting energy and capacity in that price, and not just an energy portion.
But Mr. Goen, wouldn't you agree that the avoided cost rate that you filed at the commission is supposed to account for all that? I mean, wouldn't you agree with that?
I wouldn't. I don't know that that's the case.
Do you know it's not the case?
I don't know that avoided cost is capacity and energy.
This is Mr. Nguyen. What I would add is that this solar resource is a long-term resource, and when we do the economic evaluation to see if it's beneficial for customers or not, we look at it from a long-term perspective, comparing it to the next best long-term alternative for Entergy Mississippi customers. So the economic evaluation takes into account the avoided capacity, long-term capacity, as well as long-term energy prices associated with the facility. So the long-term capacity based upon the levelized combustion turbine or CT, and the long-term energy price over the life of the asset is based upon the avoided MISO energy pricing. And through that analysis is where we were able to evaluate that this is a positive net benefit for Entergy Mississippi customers to provide that economic value as well as risk avoidance as well as reliability value.
Yes, sir, I appreciate that, but would you at least agree with me that you did not compare this to your avoided cost rate that's on file here at the commission? Because you don't know what it is, so can you at least agree with me that what you're testifying to today does not take into account what your avoided cost rate here is at the commission today?
This is Mr. Nguyen. I agree that the analysis does not look at a single data point for avoided cost, but what's appropriate for a resource evaluation of a long-term resource like this would be the long-term avoided cost.
Okay. Let's talk about just, and Mr., I don't know who should answer this. I'm just trying to summarize the deal. So Entergy is proposing to rate base this project. In other words, put this project into rate base. So Entergy has no risk with the project. Would you agree with that? Anybody?
This is Mr. Goen, and I disagree. There's annual prudence reviews for this resource, just the same as any other resource. We recently acquired Choctaw and other resources in the past that'll be subject to prudence review, and so that does subject Entergy to risk.
Okay, but the capital investment, if it's approved by the commission, it will be deemed prudent, and that, there's no risk of that going forward. You don't agree with that?
I do agree, if the commission approves the transaction, then yes, we would go ahead and invest the capital in it.
Okay, and then your partner, assuming you find a partner, and then assuming that the IRS treats this the way you propose it, and that GAAP is followed and approved by your independent auditors, and assuming all the tax accounting is approved and all the management accounting is approved, financial accounting is approved within the plan, and that those benefits do flow through the partnership the way you proposed it. Assuming all that, your partner will get the benefit of the investment tax credits, correct?
I believe that Entergy Mississippi customers get a substantial benefit from the tax credit. And I don't know that I agree with all the preference before that, but I do agree at the end that, yes, the tax credit benefit does flow to Entergy Mississippi customers. That's the purpose of bringing in the partner, such that we get a higher percentage of the output of the resource than we would have otherwise had we not brought in the partner.
I'm listening to you try to answer my question. Are you saying your partner does not get any benefit from the investment tax credit?
Let me take a step back, and this is Mr. Goen again. The way the structure would work is we would split up the tax credits and the cash proceeds that you get from MISO going forward on separate percentages. The partner can take advantage of those tax credits. So they would thus take a large portion of those tax credits.
All right, that's all I'm asking.
We would then, but I think you can't stop at that point. What you have to realize is because they are getting that lion's share of the tax credits, that means that Entergy Mississippi customers get a larger share of the proceeds from the sale of this resource into the MISO market. And that's the benefit of bringing this partner. And that's where Entergy Mississippi customers benefit the roughly $15 million that I put in my testimony.
No, I understand what's in your testimony. I'm just trying to simply say that your partner is going to get the benefit of the investment tax credit. I mean, that's what incentivizes them to be your partner, is it not?
They are coming into the deal for a benefit as well. That's correct.
Okay, so ratepayers who are financing this whole transaction will be getting roughly 230 million kilowatt hours at above your avoided cost, and will be ensuring that Entergy, based on a 50-50 capital structure, earns about $6 million in additional profit on this project. Is that not correct? What's the hedge?
I think you've taken a couple steps that I'm not sure.
Okay, well, let me back up and walk you through it. Are you aware of the capital structure that Entergy Mississippi operates under?
Yes, I can look it up.
Okay, well, would you disagree if I told you it's 50-50?
No, I would say it's close to that.
Okay, so how much is the project? Cost-wise? 153 million?
Correct.
Divide that by 2?
If we pursue the partnership, you'd have to take a lesser percentage than the 150 million and make that reduction. In my example before, where I said was 70-30, you'd say 150 million times roughly 70%, and that would be Entergy Mississippi's investment.
Yeah, but we can talk about that in a minute if you want to, but those benefits flow differently. Okay, well, let's just take your reduced number, divide it by 50 and multiply it times your ROE. What will Entergy get in additional net income from this? That they're not getting now.
All right, I'll have to get my calculator out on this one.
Well, I can wait. And your current March 1st, your current FRP filing, you're seeking a return on equity of 9.92%.
Yes, subject to check with, Mr. Hurd, who's on the line as well. I would say you had a $153 million asset, and roughly 70% of that is about $107 million. And then if you assume a 50-50 capital structure, with 50% debt, 50% equity, is about $53.5 million. And then if you assume the 9.92 equity returns, you'd be looking at a little over $5 million would be the equity returns.
Actually, guys, if you look at my exhibit 1, you can see the return on rate base is $7.4 million for our 70% share of this.
That's
return on rate base. That's not return on equity. Correct? Who was that talking?
Correct. That was Alan Hurd. I'm sorry.
So your 7% number you just quoted is return on rate base, not return on equity, right?
It's correct. Yes, it's return on rate base.
What I'm trying to get to is how much net income are you going to make off this? Is it by the commission approving this project? Entergy will make roughly $5 million more money per year than they're making now for kilowatt hours that are more than their avoided cost on file with the commission. And I'm trying to figure out how that's good for the ratepayers when we know your partner is going to get the investment tax credit, Entergy's getting the guarantee, and the ratepayers getting the same kilowatt hours for slightly more money. That's the only question I have.
I will say that we have shown that this provides a benefit to the customers of Entergy Mississippi. I'd also say that $5 million that we just calculated, that's the first year. Remember, rate base and assets depreciate over time, so you can't say $5 million a year in perpetuity. That's the first year. By the end, there's roughly nothing as you depreciate the assets. So you have to look at that 3 times. And I would say that, yes, Entergy has to invest, in this example, $100 million in capital. If we invest $100 million in capital in a transmission line, this is the same kind of returns we get. If we do a distribution asset, it's similar returns as well. When Entergy invests capital, that's part of the regulatory compact. Okay, there is returns on that investment.
Well, I just want to follow up on what you just said. You said Entergy has to invest capital, and I think that's the problem here. You don't have to. You did not go out and do a PPA, did you not?
Correct. We did not do a PPA.
And solar projects have been done in this state and states all around the nation where ratepayers didn't put up the capital. Is that not correct?
I'd say that if we did a PPA, there's also earnings on a PPA as well in Mississippi.
Potentially, but there's no guaranteed capital investment from the ratepayer, correct?
If you do a PPA, you do not have to invest capital. If that's your question.
And we didn't even look at that option, did we not?
I'd go back to when we put together this entire RFP and everything. We did look at, all right, how are we going to figure out what's the best resource for Entergy Mississippi customers? And when when we evaluate, we looked at a lot of different options to figure out, hey, you look at cost, you look at risk, you look at performance of the resource, and we made the decision back in that time period to pursue BOT. And a lot of the reasons why were we took a long-term view for the customers of Mississippi. If you take the short-term view, you're right, you might be able to find a PPA for cheaper for customers, and we would still get a return on that PPA. We took a long-term view and we said, hey, in 5 years or 20 years, whenever the PPA expires, we still have an asset. If we don't have an asset in a PPA situation, now you've subjected the customers of Mississippi to what is that cost going to be at that point in time. And by taking that long-term view and showing that, hey, there are benefits for customers, we're able to find that. Other major things, if you own the asset, who's going to take better care of it, an owner or a renter? Think about if I rent a car or I own a car, I'm going to take a lot better care of that asset if I want this for long-term benefits of Mississippi. Plus, another huge consideration we looked at is, look, we do in my group what's called a technology assessment of all the technologies that are out there. We spend a lot of time on that. We see a lot of cost declines in significant technologies that can help a lot. One of those being batteries. If it's a PPA, then somebody else is going to own the site. They're going to be all that. We're not going to be able to expand it with maybe adding batteries to it. That's one of the technologies that my group spent a lot of time in realizing that while it's not economic today, we see it's going to be economic in the future so that we can smooth that solar output similarly through time. And so any other future expansions to the facility as well. That's another thing. If we own it, then we can expand a lot easier there. Also, technology upgrades. If there's additional changes in technology that, hey, maybe bifacial panels comes in, so you have the benefit of replacement of panels of that. And all those kinds of considerations really went into our decision of why we were deciding that, hey, the BOT is the right thing for the customers of Mississippi.
I appreciate all that, and everything you just said is a double-edged sword. There's a technology risk, all of that, and the ratepayer bears the risk, bears the cost for that.
Let me interrupt. Let me interrupt here. We spent a lot of time on this, Mr. Campbell. He's answered the question twice. Let's move on. Do you have any other questions?
I do have questions, Mr. Chairman. There's a fixed energy payment in this partnership. Is there not a fixed energy payment that goes to the partner?
That's correct. There's a hedge portion of the partnership agreement, yes.
Who is responsible for guaranteeing the payment of that? Who bears the risk of the payment for that?
That would be part of the deal.
Is that the ratepayer?
Yes, the ratepayer would get 100% of the proceeds of the assets, sales into MISO, and would be making a payment of what we expect to be a price similar to what overall market price would be for the roughly, if we use my example from before, roughly 30% of the asset.
Okay, that's all the questions I have.
Commissioner, this is Tiana Raby. If you will, I would just like to make one clarification for the record and for the commissioner's reference.
Okay.
That when Mr. Fong was testifying about the avoided costs, he talked about the long-term avoided costs that were part of his analysis, and the reference that Mr. Campbell was making was about the short-term avoided costs, which are completely different. And so we just wanted to make that clarification for the record.
Okay, thank you.
And Mr. Chairman, I would just add that the avoided cost number is their number that's on file at the commission.
Duly noted.
This is Tiana Raby, and we agree with that, but that is a short-term avoided cost, which I said is completely different than what is part of Mr. Gwynn's analysis.
Okay. Does the commission council have any questions?
Commission doesn't have any questions.
Okay. Are there any other questions from the staff? Any questions from the commissioners?
We don't have questions, but we do have a witness, Mr. Chairman.
I think
Is that Mr. Campbell?
Yes.
this is Frank Farmer, I believe the commissioner was referencing the panel witnesses from Entergy.
That's
Well,
correct.
Before we move on to the,
Questions from staff.
Okay.
Mr. Chairman, this is Commissioner Press. I have one, just two questions, please, for
Sure.
whoever can answer this. Let me ask, Ms. Raby, could you point me to the right witness to add to? Well, I will just ask you, and you can take it from there. How many acres are involved in this proposed plant, proposed solar farm?
This is Mr. Goen, and I believe it's about 1,000 acres.
Okay, and that's all those acres in Sunflower County.
Yes, sir.
Okay. What, this is always an area of concern for me. I don't represent Sunflower County, but I'd just like to understand the constructs of the deal. Regarding the tax rate paid to the county, will that be under this scenario? Would that be, since Sunflower and Recurrent are not public utilities, and I assume are certainly not seeking to be in this arrangement, how would those ad valorem taxes to the county be calculated? Would that be through Entergy's calculation for Department of Revenue, or would that be paid by Sunflower Solar or Recurrent?
This is Mr. Goen. It would be based on the utilities tax rate.
Okay. All right. Do you have any idea what the calculation of those tax payments are?
I believe Mr. Nguyen does.
Yes, this is Mr. Nguyen. We have an estimate included in our analysis that it's approximately $3.5 million for the first year, and that declines over time as the rate base declines. On average, over the initial 30 years, it's approximately on average $2 million per year.
Okay, and that is direct ad valorem tax to the county, correct? Not any other entity. That's straight to to Sunflower County.
Yes, yes, sir.
Yes.
Okay, I just want to make sure about that. The other question I would ask, or just note, the Declaration of Policy in the state, 7732 E and I. E speaks to the Commission's duty to promote harmony between utilities, their customers, and the environment. I deals with economic development. And then, of course, 77344 is another statute that the legislature enacted looking at the Commission's role in promoting economic development in the state. And one of my questions related to that in the context of the Declaration of Policies 7732 E and I, and then the authority granted in 77344. And putting those statutes in context here for just a minute, there was just some testimony about the benefits of battery storage and other technologies that are coming on board. My question is, looking at the possibilities of a battery storage type of pilot project, could the witness, I don't remember who it was speaking to that, speak to whether there would be benefits to Entergy customers if there were the ability to do that type of pilot project through this Sunflower Solar project? And of course, again, in context of those statutes that I've cited.
This is Mr. Goen, and yes, we would do an economic evaluation, and we'll continue to, as we see battery prices fall, and make that evaluation to say, yes, this could be a benefit for customers, and that would come back through this same form if we made that decision in the future.
But does the construct of this proposal as opposed to other vehicles, does it lend any advantage to those type of pilot projects as opposed to maybe a PPA?
Yes, significantly.
And could you explain that, please?
Yes, by being the owner of the facility, this is Mr. Goen again, by being the owner of the facility, we would have control of the area around it. And we would be able to unilaterally make that kind of decision and bring it to the commission of saying, hey, the economic support, as you said, additional batteries or additional technology enhancements, all those kinds of things, versus if we were in a PPA situation, someone else owns that facility. We don't have the same ability to make that happen for the customers of Michigan, Mississippi.
And are you familiar, Mr. Goen, with an argument? I'm not saying whether I believe it or not, but at least a statement that you hear regularly in much of the regulatory community and in the industry that possibly one of solar's challenges is the fact that without that battery storage adds to the value of solar because it's being able to be called upon at different times.
Yes, I'm aware of that argument, and I believe it as well, that by being able to spread the megawatt hours that are produced by a solar facility into other hours of the day, or to load them up into certain hours when it's more beneficial for us when we're playing for Energy Mississippi's peak, that can have huge advantages for the customers of Energy Mississippi. So yes, I'm aware of that argument, and I believe in it as well. And that's one of the reasons why we are spending a lot of time on looking at batteries, and as the technology prices continue to come down, I view it as it's going to be a viable alternative.
Do you feel that that looking at industry trends and in your expert opinion, whether or not batteries, do you see nationwide a move toward battery storage in conjunction with solar generation?
Yes, I do.
And why do you think that's happening?
Right. It's a lot of the reasons I explained of, hey, you can potentially move, well, not potentially, you can definitely move some of the megawatt hours of the time that they're produced to other times when it's more beneficial on your system to have those same megawatt hours. And there's also the benefits of if you pair currently in the tax code, if you pair a solar facility with batteries, and you can get the tax credit associated with solar as well, versus just a standalone battery. And so that's another benefit to batteries that when you pair it with solar, that makes it even more promising.
So to follow with that just a minute, if a body that set policy in the state of Mississippi pursuant to a declaration of policy from the legislature wanted to see our nation become more independent, our environment become cleaner, and utilize our natural resources in a way in which promotes economic development of the state, is it short-sighted or long-sighted to not at least evaluate and look at the benefits that may come from a energy storage, a battery storage evaluation versus a project that does not have that capability?
I would agree with your statement that yes, you do want to evaluate proposals that do have that capability.
Okay, no further questions, Mr. Chairman.
Okay.
Okay, is there any other witnesses?
I'd like to call Colin Kane for the staff. Colin, are you prepared to talk? Okay.
Yes.
State your name and business address.
My name is Colin Kane. I'm a partner in the energy practice at Bates White Economic Consulting, and with offices at 2001 K Street Northwest in Washington, D.C.
Whose behalf are you testifying today?
I'm testifying on behalf of public utilities staff.
Have you previously testified before the commission?
I have submitted pre-filed testimony in the Choctaw acquisition proceeding, and I also testified at hearing on October 1st, 2019.
All right. Can you give us an overview of your testimony?
Sure. I'd like to note initially that the original Bates White report in this matter and my direct testimony were filed in August of last year. Since that time, certain details affecting the value and the cost associated with the proposed transaction have been updated and have served to reduce the estimated cost of Sunflower. And the most significant of those was a reduction in the anticipated fixed operations and maintenance cost for the facility by approximately half, which had a substantial effect on the economics. Obviously, as we have heard today, the tax equity partnership arrangement that's been proposed was also a substantial change from the original proposal. In summary, and I'll try to keep this brief, What I've concluded is that, that the updated operating cost information indicates that costs borne by ratepayers will be lower than those assessed in the original Bates-White report. I also conclude that EML's proposed tax equity partnership arrangement is an appropriate way to improve the net present value of the Sunflower acquisition. And it's reasonable to expect that ratepayers will be better off under that tax equity partnership arrangement than under the original BOT proposal, with the caveat that the specifics of that transaction will not be known until sometime after the commission decides whether to approve the transaction. There's a reasonable basis to say that the tax equity benefits will move the value of the investment tax credit up, as we've already heard today, and that creates an increased net present value for ratepayers, for EML and for ratepayers. However, I also conclude that there's substantial uncertainty regarding whether ratepayers will, in fact, realize the net benefits that have been estimated for the transaction, and that the uncertainty derives primarily from two factors. The operational risks that the plant will produce lower output than has been projected, and more significantly, the potential that the actual value of energy and capacity from the project that's been estimated will turn out to be lower than has been projected. The transaction as currently proposed would largely shield the tax equity partner and EML shareholders from the effects of that uncertainty. Basically it would fall on ratepayers. I think that, there's been, in EML's characterization, ratepayers have the advantage of the upside on the possibility that energy and capacity is valued higher in the future. I would agree with that, but I would find that the risks are more weighted towards the energy and capacity values being lower in the future than estimated in EML's evaluation. As I addressed in my August direct testimony, the solicitation that led to the selection of Sunflower was narrowly targeted, and EML acknowledges that. They were only seeking offers for the BOT type structures, and there was no solicitation of power purchase agreements. And it's my view that a more expansive solicitation would have provided a more complete view of solar options for serving Mississippi ratepayers. As it stands, there's just, it's very difficult to observe comparable transactions, comparable PPAs, put them on a basis that for direct comparison. There's just insufficient basis for me to conclude that the proposed transaction is beneficial relative to other alternatives, again, particularly with respect to PPAs that are standard for solar generation. And finally, I reiterate the recommendation from the Bates-White reports, the initial report and the supplemental report, and in my direct testimony, that regardless of whether the Commission approves the proposed transaction, that future EML initiatives for adding renewable generation be based on broader solicitations that would provide increased confidence in the value of the outcome for ratepayers. And I think we heard from EML earlier that they are in general agreement with that prospect.
Does that conclude your testimony?
That concludes my overview of my testimony.
Okay.
Just two quick questions, and then I'll tender the witness. In your summary, you mentioned the alternative of a purchase power agreement for solar resources. Would a PPA provide any assurance of benefits to ratepayers?
Well, a PPA wouldn't necessarily guarantee that benefits would exceed costs, and fundamentally, that's what we're talking about with the evaluation of the Sunflower proposal, that there are costs that are known with a fair degree of certainty, and there are estimated benefits which have a much wider range of uncertainty around them. And the PPA doesn't necessarily guarantee that benefits will exceed costs. You have the advantage of having a fixed schedule of PPA prices for energy, and that provides some assurance. The seller of the PPA may estimate costs and establish the schedule for under the PPA for prices that would provide sufficient revenue to recover the investment costs and a rate of return. But if costs turn out to be different, the schedule prices remain the same. So the risk of cost overruns or costs being different than expected lie with the seller, which is a significant benefit of a PPA. An additional benefit that a PPA provides is that ratepayers are only on the hook for paying for energy that is actually received. So operational risk associated with the output of the facility being lower than expected, you face the same dollar per megawatt hour rate. When you own the facility, those risks, the costs that are going through rates to ratepayers are going to be the same regardless. That the volume of output and the value of that output is more uncertain.
All right. Thanks, Mr. Kane. Mr. Chairman, that's all we have. We tender the witness.
Okay.
This is Tiana Raby. Entergy Mississippi doesn't have any questions for the witness.
Okay, does any other party wish to put on any testimony? Okay. Is there any other matters to be presented to the commission by any other parties? Go
Just
ahead.
any questions?
Sorry.
This is Brent Bailey. Do I have to keep it specific to one party, or is it be open to everybody? Or
Well, I imagine since you're the commissioner, you can ask him whatever you want, whatever you want.
I'm just trying to follow protocol.
This is the question of Mr. Kane at this time.
Okay, all right. Well, I mean, I know there's a lot going on here. We've certainly covered a lot of ground today and trying to unpack a lot of information that came on with, this has certainly been an ongoing effort with a lot of information coming from all parties. And I know Entergy has a responsibility and would be irresponsible if they weren't pursuing projects and investments that were ultimately profitable and created net benefits and long-term supply for their consumers. But, the PSC would certainly be irresponsible if we didn't do our best to ensure that these projects are not in the public interest and contributed net benefits to our customers and the ones we represent as well. So I appreciate everybody's patience as we work through this issue here. I know there's a lot going on. I'm certainly been following this project for a long time. I've been reviewing a lot of the testimony and exhibits and supplemental testimony from all sides, and there's certainly a lot here. Certainly some risks that were brought up today that are, I think, very valid for continued discussion and consumption going forward, whether it's regarding the capacity factor issues or the hedge structure concerns, the confidence in attracting and acquiring this financial partner that we continue to talk about, and certainly these evolving economic challenging times that we're dealing in right now. And there's other factors out there as well that I think we need to continue to discuss, particularly with the exhibits that came in within the last 24 hours. And I hope we continue to keep a fruitful conversation going that way. Mr. Chairman, can I at least ask a question or two to our Entergy?
Sure,
partners?
absolutely. Go ahead.
All right. Just for our Entergy, witnesses, I know there was a discussion a bit ago about the rate impacts going forward. If the bot, or at least if the tax equity partner is found and everything goes through successfully, what is the estimated annual rate impact on a customer using 1,000 kilowatt hours a month?
Right now, this is Alan Hurd. The estimate on customers currently is a $76 when you include, the effects of all the riders, the impact on the bill is just 66 cents, which includes a 10-cent credit of, flowing through the PMR.
And in a worst-case scenario, a financial partner is not found, and the deal reverts back to the BOT, proposal from last year as still allows in its testimony or in the exhibits, what would that potential impact customers be at 1,000 kilowatt hours per month?
I don't have that readily in front of me. I have to look back at my testimony. I believe if you look back at the testimony that was filed that had the $19 million revenue requirement, the typical bill for that was $1.59 per month. And when you include, or when you exclude all the temporary effects, you would only see a net increase of $1.32 per month.
Thank you for that information. Just real quick for the Sunflower County folks that are online, Mr. Fair, I know you mentioned CSI Recurrent and the subsidiaries are also manufacturers of solar modules and other equipment. Will CSI, Canadian Solar Recurrent, be self-supplying panels for this project, or will they be acquiring projects outside through a bid or solicitation process?
Let me ask Mr. Calico if he knows the answer to that.
Yeah, this is Jeff Calico. There are various pre-approved module manufacturers listed in the BOT agreement, which we will expect to choose modules from one of those suppliers. There's a good chance that the module supplier that is chosen will be Canadian Solar, which is an affiliate. When we procure modules from our affiliate, we do so on arm's length market terms.
Appreciate that. I think that's all the questions I have. A lot of them have been addressed through the conversation and the dialogue between the parties on each side and the testimony, so I appreciate it. One thing I want to ask, Mr. Chairman, since this is a public hearing, and we don't have public here and not able to participate, that if any public is out there and listening to this, if they so wish, could file comments or observations into this and maybe give them within 10 days to do so. Is that too much to ask, or?
No, I think we can do that.
All right, since this is, in the general public interest, and this is certainly being broadcast, and we don't have an audience here today to do that. If folks who wish to add or comment or thumbs up, thumbs down, provide their insights to this, we'd certainly love to have them have that opportunity. So I appreciate that if that can be done.
Yes.
And I guess just a final comment, and I'll hush here, but I know there's a lot of conversation between the parties about, how this project was sought after and the proposals that came forth, and I think we've all understood that this was a fairly narrow RFP that was put out there. I just hope going forward that as new generation is considered before the commission, that in these future applications, regardless whoever brings it forth, that open source and RFP is certainly part of that solicitation of any certificate that is brought forth to give us all the opportunity to compare the best resource opportunity, whether it's cost, benefits, performance, et cetera, just so we can hopefully avoid some of these conversations and disagreements and dialogues going forward, that we do have comparable resource opportunities, regardless of what that energy resource may be, to have constructive dialogues and conversations, and so that we are doing good planning, long-term planning going forward.
I agree.
Mr. Chairman, I've got one question.
Sure.
This is for Mr. Farmer. Mr. Farmer, there's been a lot of discussion in this case regarding different factors, that are there that, obviously, if the commission, were to approve the project, there is a certain degree of unknown regarding the equity partner. Is it not true that the commission has statutory authority to condition certificates?
That is correct, Mr. Commissioner. The commission can condition certificates.
Okay, and so if the commission were to approve this project and put proper protocols and proper conditions on the certificate, then the commission could have reporting requirements and certain triggers in there that could mitigate many of the concerns that have been raised today. Is that correct?
To a large degree, that's correct.
Okay. So any idea that if the commission says yes to this order, the commission is bound to a yes or no simply on what's presented? That's not correct, is it?
No, but when you get into a situation where a conditional certificate is granted, there's the potential for stranded costs to be lost.
Oh, I agree with that. But I mean, if the idea is that the commission is somehow in a box, that if the commission says yes to the project, then obviously there's no. I mean, we retain wide leeway in the statute to condition things that are based upon the protecting the public interest. Isn't that right?
That is correct.
Okay. And so if the commission were inclined to grant a certificate, there are certain conditions in the period between the hearing and if that comes to pass. I don't know whether it comes to pass or not, but I'm just saying in a hypothetical, legally, statutorily, during that period, there could be crafted certain ratepayer public interest protections in that order.
That's correct.
Okay. Thank you, Mr. Chairman. No further questions.
Mr. Chairman, I have one thing to add. If the commission is granting 10 days for public witnesses to file comments, that would conclude at 5 o'clock on Friday, March 27th. That's 10 days from today.
Thank you.
Just for the record. Frank Farmer.
Thank you.
Okay, moving on. Does any other party wish to put on testimony at this point?
Commissioner, this is Tiana Raby. I don't have any other testimony or questions. However, I would just like to advise the commission and the staff as well that to the extent the exhibits that we provided on yesterday have caused some concern, I wanted to explain. We learned, just as all of us very recently, that this was going to be a fully telephonic hearing. And so in anticipation of some of the questions or concerns that we wanted to discuss, we were trying to come up with ways that we could illustrate some of the discussion and make sure that the parties who would be reviewing it and asking questions had the details, but also recognizing that we were in an open and public forum. And so that was what we were trying to address. Most of the information is all within the testimony and the filed record that we had presented to the commission prior, but we did not want to add to the confusion. That was an effort to try to make it more efficient. So just wanted to let you all know that we weren't trying to surprise anybody. That was really an effort to make things go better.
Okay, thank you for that. Okay, is there any other matters to be presented to the commission by any party? Okay, does this conclude the presentation for the commission? Frank?
It appears that it does.
Okay. All right, thank you. After seeing pre-filed testimony and that which was presented today, the commission will take this matter under advisement. We will have an order completed with our decision in the coming days. Thank you all again for being here today, and if there's no other business of the commission, we stand adjourned.